Well, the Reserve Bank's final cash rate decision of the year is about to be handed down by the Monetary Policy Board. Let's bring in our business reporter, Edward Boyd. Ed, the RBA is widely expected to keep interest rates on hold at 3.6%.
Yeah, look, not the news that people with a mortgage or business loan would be hoping for going into Christmas. Look, the expectation is rates will be kept on hold today by the Reserve Bank Monetary Policy Board at 3.6%. The number's going to drop in the next 5 seconds or so. But this is obviously a really important figure that affects everything across Australia's economy. As expected, rates on hold by the Reserve Bank at 3.6% during the month of December. It's their final board meeting of the year. Let me just bring up the statement from the Monetary Policy Board here talking about the decision. They say at the meeting today, the board decided to leave the cash rate unchanged at 3.6%. While inflation has fallen substantially since its peak in 2022, it has picked up more recently. The board's judgment is that some of the recent increase in underlying inflation was due to temporary factors, and there is uncertainty about how much signal to take from the monthly CPI data, given as it is a new series. Nevertheless, the data do suggest that some signs of a more broad-based pickup in inflation, part of which may be persistent, and they will closely monitor that. So clearly the Reserve Bank here is worried about rising inflation in our economy. You can see the cash rate target going back to 2022. It basically peaked above 4% at 4.35% and has been 3 interest rate cuts this year from the RBA, which has been great news for Australians and mortgage holders. But now rates have been on hold for the past few meetings in a row. Just reading more from the decision today, it says the recent data suggests the risks to inflation have tilted to the upside, but it will take a little longer to assess the persistence of inflationary pressures. Private demand is recovering. Labour market conditions still appear a little tight, but further modest easing is expected. The board therefore judged it was appropriate to remain cautious, updating its view of the outlook as the data evolve. They say today's policy decision was unanimous. The board's focused on its mandate to deliver price stability and full employment and will do what it considers necessary to achieve that outcome. So clearly, we saw the recent inflation numbers come out a few weeks ago, showing that the trimmed mean, the figure the Reserve Bank watches closely, had actually accelerated in October to an annual rate of 3.3%. Remember, the Reserve Bank's mandate is to keep inflation between the target band of 2% and 3%. So there was a bit of a surprising increase to inflation, and you can, just from reading that statement there from the board, they're obviously concerned about it. They're cautious. They're going to watch what happens over the next couple of months with inflation before making any adjustments to the cash rate, because this is the only policy lever that the Reserve Bank have. They can either raise the cash rate, keep it on hold, or lower the cash rate. Today, they've obviously chosen to keep rates on hold over Christmas. They're going to monitor the economy closely. They're going to watch inflation, see how it pans out over the next few months, and also watch the jobs market. We're going to get the unemployment numbers on Thursday this week, and the unemployment rate has been reasonably close to 50-year lows. It's been at 4.3%, which has also been a bit of a surprise for the RBA. They were expecting it to pick up to 4.5% by the end of this year. It's a little bit below that level. So no surprises today, Holly, from the Reserve Bank. They've kept rates on hold at 3.6%, and they're going to stay that way at least until the next board meeting, which is in February.
Definitely not surprising today, Ed. The RBA, of course, now has an 8-week break. Its next decision won't be announced until February now.
Yeah, the 8-week break is quite significant because we've got a few big pieces of economic news that are going to happen between now and then. Later this week, the US Federal Reserve is expected to cut rates. Here are the rate hike odds, so the chance of a rate increase next year in calendar year 2026. This is from the London Stock Exchange Group. You've got in February, which is the next board meeting, 0% chance of a rate hike. But by the middle of the year, June, markets are now pricing in a 62% chance that interest rates could go up by 25 basis points. And then December next year, so this time next year, they're looking at a 72% chance of interest rates rising. It's worth also pointing out that money markets are a bit more ambitious in their pricing than economists. So there's probably less economists out there that think rates will go up as opposed to the money markets. Here's a bit of a statement from the RBA. The board will be attentive to the data and the evolving assessment of the outlook and risks to guide its decisions. Clearly, the big risk is inflation getting out of control. That's something that the RBA does not want to happen. So we've got the US Federal Reserve having a board meeting later this week. They're expected to cut rates. The Bank of Canada is expected to keep rates on hold this week as well. We saw the Reserve Bank of New Zealand cut rates just a couple of weeks ago. And then obviously New Year and Christmas is a big spending period for retailers. It's a big time where a lot of Australians spend money in stores, go out, cafes, restaurants, holidays. That can be inflationary. So the Reserve Bank will obviously watch that. We'll get the monthly inflation data as well early in January as to Holly, which the RBA will clearly take a look at before the next meeting.
And Ed, of course, notable, the stock market was down slightly prior to the decision. How have investors reacted now?
Yeah, the market was down about 0.26% before the numbers were released or before the policy decision was handed down. It's actually spiked a little bit. It's gone up slightly to about 0.19%. I think if we were to show you the market pricing for a rate cut hike yesterday, the chances of a rate hike in December would have been a bit higher, closer to 85%. Today, they've come back a bit after this decision. So I think it's a steady as she goes decision here from the Reserve Bank, and the language is sort of saying, look, we're being cautious, nothing to get crazy about yet. We're not looking to increase rates at this stage. Aussie dollars about 66 odd US cents. You can see it sort of dropped a little bit off the back of the news. So I think it's going to be interesting to hear. Here's the bond yield too, close to 4%. Which I think is the highest level in a couple of years. That's a key piece of data the RBA watches as well. But clearly, we've got the press conference at 3:30 from Michelle Bullock. She's going to obviously talk about how they're cautiously optimistic that inflation will get back into that target band. But it seems like that's not going to happen probably until the end of next year, Holly.
Ed, you are the very best to break this down for us. Thank you very much. We'll see you soon.